So what is happening with SVOL, everyone? I've been getting messages left and right about this. So SVOL, one of the community favorites, of course. The Simplified Volatility Premium ETF has reduced their monthly distribution recently from 30 cents to 28 cents. So normally they're typically very, very stable. We know at one point it was 32 cents. At the beginning, it was a little bit more random. Then they decided to make it more stable at 32 cents and then went to 30. It was 30 for a long time and now it's at 28. So let's try to figure out why that is. It's really not rocket science for why that is, everyone. And another YouTuber, Wealth Adventures, had somebody from Simplify ETFs on. And if you go on this video, by the way, if you go to all the way at the very end, SVOL distribution section, about the 26-minute mark, he explains really why. And the two factors he mentions is that volatility is lower, has been lower lately. But I think the main factor is really the second thing he mentions. Interest rates are going down, right? We know that the Fed reduced interest rates by 50 basis points, which is a lot higher than the expected 25. And maybe that trend will continue. So how does interest rates going down affect SVOL? Why did I end up selling it? Should you sell it? And how is SVOL doing overall in terms of performance? That's what I want to cover in this video. So it might be all over the place because this video is not going to have much editing. I'm just going to go for it because I want to get it out as soon as possible and I don't have time to edit it. So SVOL, remember guys, SVOL is basically an ETF that holds a bunch of very low risk assets, mostly short-term government bonds, and with those assets they do a VIX short strategy. So on about, you see here, 0.2 to 0.3. So translation is they take 20 to 30% of the net asset value of the fund. Let's just call it 25%. Let's do the average, right? 25%, and which is what Larry Kim confirmed that they typically do it. The average is 25%, and they short the VIX with that percentage. So the rest of the assets in the fund, they're really the collateral to run this short VIX strategy. So of course, if we scroll down, you'll see what if you look at what this fund holds, you'll see that it has about 35% in other Simplify ETFs, which we'll look at together in a second. But the bulk of it, if you really look at the bulk of what this ETF holds, it's short-term U.S. government treasury bills. So of course, if interest rates go down, these assets are bringing in less income, less interest. So that is what I feel is the main reason why they had to reduce the distribution, because of the interest rate cuts, right? And it's a pretty significant portion of the portfolio. If you actually add them up, it's about 65% of the portfolio is in these short-term U.S. government bonds. Then, of course, you have all the VIX short strategy stuff, which might look very confusing, but this is just a bunch of VIX calls. This is the hedge in case the VIX spikes. So this is just an extra hedge. And here is where you actually see the main strategy, or the VIX shorts. You see that here. So in short, most of this fund, 65% holds short-term government bonds. The rest holds a bunch of Simplify ETFs, which we'll go through together. So you have AGG and Buck, which make up the most at almost 9% a piece here, 9%, 8.83. So AGGH is a Simplify's aggregate bond ETF. So whenever you see aggregate bond, or the most popular ETF to track this is the AGG ETF. If you scroll down, this ETF actually holds the AGG ETF, I believe. Yes, there it is. The iShares Core US Aggregate Bond ETF, you see that here, 55%. So aggregate bonds, the way I like to look at it is it's a collection of bonds. So you got corporate bonds, you probably got government bonds, and you have mortgages as well, right? So then another big position in SVOL is Buck, which is almost like a cash alternative. It's very safe. It's mostly, again, U.S. government, U.S. treasuries, and they do some options on there to boost the yield a little bit. So on top of the, let's just continue. Let's finish. You have the Simplify National Mini Bond ETF. That's a newer ETF that invests in municipal bonds. You have TYA, and by the way, NMB, the municipal bond one here, makes up 6% of the portfolio. TYA, which makes up 4%, so it's going less and less in terms of allocation. Remember, the SVOL percentages or the allocation changes month to month. For example, this month, high is not there and it used to be there. So other little small positions in TYA, which is Simplify Intermediate Term Treasury Futures Strategy ETF, which is basically medium term government bonds, guys. U.S. government bonds. You have a tiny bit in MTBA, 4.45%, which is mortgages. And you have a little bit in CDX as well. Here it is, 2.5, which is high yield, which is basically considered junk bonds or high yield corporate bonds, which the main ETF to track is HYG, which I believe is, yeah, here it is. It is in this ETF here. So in short, everyone, SVOL had to reduce its dividend because it's taking in less income, because the majority of this portfolio, a lot of it is in U.S. government bonds, especially short-term U.S. government bonds, literally short-term government bonds. And then even indirectly, a little bit in AGGH, a little bit in Buck. There's other kind of fixed income in here, which might also be impacted with rates going down. So that's really why SVOL had to lower its distribution. It's bringing in less income. But still at 28 cents a month. And of course, this could go a bit lower as time goes on. If interest rates go down a little bit more, I wouldn't be surprised if it goes to 27 or 26. They have no choice. They're being very responsible. They don't want to pay out more than they're bringing in. But even at 28 cents a month, that's 336 divided by the current stock price. You still have a phenomenal yield of 15.5%. And if you remember, the guy who created this ETF from Simplify, Shailesh, said his objective is always to deliver the maximum stability in terms of capital with approximately 15% yield. So even with the reduction, they're still doing just that. It's still a really solid ETF, everyone. And just to prove it to you, so before that, my opinion on SVOL, it's more actually of a kind of like a fixed income play, an all-in-one fixed income. That's a million times better than holding actual fixed income, like, for example, TLTW or LQDW from BlackRock, right? Pure fixed income exposures. And let's just compare SVOL in terms of total returns. Let's compare them to TLTW, LQDW, HYGW, and even AGGH, which is this ETF here, which is kind of like an all-in-one fixed income solution. Let's even compare it to the Barclay U.S. aggregate, which is kind of like the average of what fixed income does. And if you look at the 1 year, all of these ETFs have been out for 1 year. You see that there's no competition, right? SVOL is just destroying everyone. The total return to performance as SVOL, obviously fixed income has been pretty good in the last 3 months. SVOL a little bit lower, but over the long term, I still feel like SVOL is a good choice, kind of to put in your portfolio if you want some fixed income, because it's literally full of fixed income anyway. So this is I feel like it's a really good solid ETF for Canadians and their RSPs, for Americans in general. If you want capital preservation, if you want steady capital and a 15% yield, this is a phenomenal ETF. It's a phenomenal ETF to keep in terms of income, in terms of consistency, in terms of complementing maybe an S&P 500 or NASDAQ or Russell 2000. It's a great equity complement, I find. And I would, if you want fixed income, this is such a better choice in my opinion. And by the way, if we just do, I was looking at SVOL compared to SPY from NEOS, right? The NEOS S&P 500, very consistent distributions, about 12.5% yield. Not only does SVOL have higher distributions than SPY, but it's actually outperforming it since inception by quite a while. You see here, quite a bit, 34.84 total return versus 29.23. So just to say, I'm just showing you this, that SVOL is no slouch, guys. It's still a phenomenal ETF. It's obviously very popular, over 1.2 billion in assets. Great for income investors still, even with the reduction, and there might be some reductions over time. But again, I suggest you watch this Q&A Obviously, you could watch the Q&As on my video, but this guy actually is a more recent one. 5 days ago, it actually talks about the distribution policy, distribution reduction. And it's basically that. It's basically because VIX has been pretty low, right? VIX's volatility has been pretty low. But I think the main reason is interest rates have gone down. And since SVOL is just packed with U.S. short-term treasuries directly and indirectly, right? Directly and indirectly within AGGH and Buck and maybe some other things here. They have no choice. They're bringing in less income. So, but it's still a solid ETF, like I showed you. So why did I sell it? In the thumbnail, which I kind of had fun with the thumbnail, by the way, a little bit, obviously. Why did I sell it? Because for those of you that follow me, this is the last portfolio unveil. You've been seeing that in my wife's RSP, there's a little bit of SVOL. There's $25,000 worth of SVOL, which the investment is worth $30,000. So I'm up $5,000 on it, technically, because remember, everything there is on drip. So my plan was to sell RIV, which is an all-in-one closed-end fund solution, and swap it into SVOL. So I'm going to declare that I have actually sold RIV, but instead of swapping it into SVOL, I decided to sell SVOL as well and swap both of those proceeds into something else. Of course, if you're an Inner Circle member, you already know what I did and what I swapped it in, because part of the Inner Circle membership, I didn't call it Inner Circle for a reason, for just randomly, right? It's for a specific reason. But part of the Inner Circle is you get to know the day of any trades or any moves I made. So Inner Circle members already know what I did. Unfortunately, if you're not an Inner Circle member, you're going to have to wait till the next portfolio unveil, or you could just sign up now and you'll see it in the past community posts, right? So if anyone is willing to take a guess, what do you think I swapped my SVOL and RIV into? Let me know. But the reason why I really did it, everyone, is because I'm not currently living off these portfolios, my RSP and SVOL. I can't believe I'm saying this, but I have to say this. It's my opinion. I feel like SVOL has just gotten a little bit too boring. It's really good. It's really solid. The total returns are really, really good. They're in line with very close to the S&P 500. The returns speak for themselves. Consistent distributions, fairly consistent distributions, rather solid, steady capital. But I feel like I just don't need it in my portfolio because it's more and more, it's looking to me like a fixed income type of investment. And I'm really not into fixed income. I wish maybe SVOL would increase the VIX exposure to 50%, and maybe it could be a little bit more exciting. And another thing I don't understand why they're doing this. Get out of the short-term treasuries completely and at least put all the assets in these simplified fixed income ETFs, at least, so you could actually get more yield. It'll be a little bit more interesting, and the yield could literally be probably 20%. But hey, SVOL is designed for a specific investor, more conservative investor, in my opinion, someone who, it's a good fixed income alternative. It's a good complement to equity, like an S&P 500 and NASDAQ 100. But for me, I'm okay going, not needing any fixed income or any boring stuff. So that is really the reason why I sold it. So yes, I did sell it. I had $25K, which the investment is turned into $30K because of the drip. I sold it. I sold my RIV, put it in something else, and you'll find out what it is next month in the next portfolio unveil. But guys, remember, total returns speak for themselves. You don't need to sell SVOL just because I do something. My portfolio is for me. My objectives are completely different from yours, right? So I hope this video was informative for you. Give me a thumbs up. I'll really appreciate it. I think that funny thumbnail deserves that thumbs up. Let me know what your guess is, what for Erica's RSP, what I swapped RIV and SVOL into. Of course, members already know. And let me know if you have any questions and if you want any details and hear what really somebody at Simplify has to say about it. Check out this video here from Wealth Adventures, and see you next time.